Nick Bennenbroek is head of currency strategy at Wells Fargo Bank. He says he expects the dollar to recover in 2010, even though, of course, it has been weak this year. Nick, welcome. Thanks for coming in. So you say the dollar's going to strengthen, but that isn't what's happening today. We had this GDP number, and it seems as though investors are sort of breathing a sigh of relief and saying, okay, we can take on more risk again. Why don't you think that's going to happen going into next year?
Well, I think part of the equation, a very important part of the equation, is what's happening with the central banks and liquidity and so on and so forth. And today was a Goldilocks number if you weren't the dollar. If you were a euro or one of these other currencies, it was a strong enough number to take away some of the fear, but it wasn't so strong that you had to worry about the Federal Reserve, for example, tightening in any way, shape or form anytime soon. We'd say that much of the dollar's weakness this year has been related to central banks and liquidity and all of the money that's been pumped into the economies. And that's a trend we believe is going to reverse. In fact, most of the forecasters are saying we're going to see monetary tightening next year from the middle of next year. As that reversal of trend happens, we'll probably see the dollar's trend reverse as well.
But you still have a fair number of naysayers out there, some prominent economists among them, who say, you know what, we talked to David Malpass, for example, this morning. He said, you know what, I think we're going to have another sort of downturn, that people shouldn't get too excited about some of these encouraging economic numbers.
Well, I don't know if we'll have another downturn. We certainly, for example, at Wells forecast, we have a conservative growth forecast for GDP at 2.4% for 2010, for example. And when you look at today's report, some of the strength was in consumer spending and residential construction, for example. So you can think cash for clunkers and the home buyers credit, for example. We're not saying another downturn, we're saying sluggish growth, but that's still consistent, we think, with some tightening, for example, because we're not talking about heading off inflation, we're talking about removing some of the emergency policy measures that are in place.
Well, even with credit markets still a little bit constrained, are you seeing risk returning?
I think we are seeing risk returning, and that's where there's a dichotomy here. We're seeing very strong equity markets, we're seeing quite strong commodities markets. We believe much stronger than the fundamentals or the economic growth would tend to suggest, for example, even despite today's jump in GDP, for example.
Well, you think that the dollar's decline is structural, right?
No, we think it's actually mostly cyclical. When you look at the structural factors, for example, the deficits and the debt levels, for example, we think they're not great, obviously. We have a very large budget deficit in the US, but they're comparable to the likes of the UK or Japan. So we think it's mostly related to how the economy is doing right now. And as I say, it's very much related to this massive liquidity injection, which, as we move away from the depression, as we move away from the edge of the cliff, we think this liquidity is going to be withdrawn and those markets are going to come under pressure.
Well, as it's withdrawn, you say the estimate is maybe it could happen in the middle of next year. How sort of far in advance of that do you expect the currency markets start to anticipate it? Because it doesn't seem to be happening yet.
It doesn't seem to be happening yet, and I think that what we'll probably see is maybe the second quarter of next year. I mean, if we're talking about tightening in the middle of the year, then certainly by the second quarter it should be a factor. We've seen it at times in the markets. About a week ago, for example, we had China had some very strong economic figures. The immediate reaction was maybe this is going to see some removal of policy stimulus. And that's what actually prompted or started the 5 days of dollar strength that we're seeing. So we're starting, I believe, to see hints of it. Of course, we actually need to see the major central banks and the major countries remove that stimulus.
Well, if you see these financial markets being held up mostly by liquidity right now, when does the growth return?
Well, that's a very good question. And the growth is returning, but it's returning just in a very sluggish kind of way. As I say, I think that, you know, we're looking at 2.4% for the US. Europe and Japan, we're looking at maybe 1.5 to 2% growth for 2000. So the growth has returned. We just don't believe the growth has returned enough to support the equity prices or the commodity prices and the strength in the currencies that have accompanied that, for example.
Nick, if people don't want to try and play this using the US dollar, is there another currency that they can look at?
Well, yes, there is. And, you know, there's the unanswered question of when is the dollar going to turn around. We would say you should buy the dollar against the euro, the pound, Japanese yen.
Even if you're early?
Even if you're early. But we can understand that some people may yet to be convinced. There are some other opportunities that sort of take the dollar out of the equation. Australia is doing very well relative to New Zealand, for example, so long the Australian dollar, short the New Zealand dollar. Norway is doing quite well relative to Sweden, so long Norway, short Sweden. Australia and Norway are two countries that have already started raising rates and removed some of that liquidity.
Well, Nick, then let me ask you, what do you think when you hear all this talk about maybe the dollar not being the world's reserve currency? Do you put any stock into that?
We don't put much stock in it. No, we think the current state of affairs is going to exist for quite some time, you know, probably a good decade or two. One of the issues that I have with the talk about the loss of confidence in the dollar, for example, is if if investors really were losing faith in the US economy, it's difficult to understand why the equity markets have rallied just as sharply as they have, for example. So
why do you think that is?
Well, again, we think it's very much a liquidity story. When you look at the growth in the money supply, the narrow money measures, what the central banks are doing, are just exploding. The broader money measures, lending by banks, for example, is still very sluggish. Yeah. So that liquidity is going somewhere. We believe it's going into commodities and equities. We don't think there's any change in the status of the dollar for quite some time.
Nick, just quickly here, we, of course, talked about Australia and Norway as the two countries that have begun to raise rates. You handicapping who's going to be next?
Not particularly. We would say this. We would say Norway and Australia will probably see a few more rate increases. Then amongst the G10, we're probably looking at around about the ECB and the the ECB and the Federal Reserve, maybe the third quarter of next year, and probably the UK around about that time as well.
Okay, Nick Bennenbroek of Wells Fargo, thanks a lot for coming in to talk currencies with us.
Thank you.
I appreciate it.